Very welcome to all of you tonight from Wealth Migrate. We are going to address the portfolio discussion tonight, and I would like to welcome my guest tonight. Paul Sriandra is on here all the way from Atlanta. Paul, maybe just say hello to the audience.
Hey everybody, how are you doing?
All right, super. I just want to check. Currently, I'm just seeing myself here on the screen. Do we see the screen as well, Melanie?
Only you, Michiel.
All right, so let me just get the book. And
Hi everyone, this is Bruce.
Perfect. Michiel, maybe just make it so that it's in presentation mode, because I can see all the slides on the side as well.
Awesome. Thank you. Yeah, welcome, Bruce. Thank you for being online as well tonight. Bruce is a co-sponsor with Paul Sriandra, all the way from Atlanta. Thanks, guys, for being online. I would like to start off the webinar just to outline to everybody while we wait a little bit that everybody comes online. We are going to have a closed discussions. This discussion is only for Wealth Migrate investors, so it's not a public broadcast, and it's a closed conversation. This conversation tonight is under these disclaimers. We are going to present a portfolio scenario and evaluation process, and that is the context of tonight's discussion. Yeah, Paul and Bruce, I see there's quite a number of our investors coming online. Thank you all investors for showing interest in this huge potential opportunity that we've got, and I would like us to go through the context of tonight. So let me just start out with the agenda. So tonight we want to evaluate the portfolio review process, which could lead to a sale or which could lead to a postponement of that decision. And the whole idea of tonight is to highlight the actual process, the context in which we as Wealth Migrated has started the process with the investment committee, the market conditions prevailing, the principles and the process that we want to go through. So I just would like to start from the beginning and just to outline very clearly, we're only going to walk through a process discussion, and this process is clearly outlined. No decisions has been made. This is purely a process that we're going to start, and we would like to inform you of that process and get your buy-in into that process so that we can come to a conclusion if it would make sense to float the portfolio as we're going to outline or not, and if so, what that process would look like. So this is the let's call it the journey that we embarked on. The context for that was that Paul and Bruce, as our sponsors, has highlighted the market conditions, which we'll come to now next. And then from that perspective, the investment committee reviewed the request and understood that it would make sense to go through a process of understanding if it would make sense to sell the portfolio. And if that process then culminate into a sales process, so be it. But before we do that, we first wanted to clarify that with the stakeholders, etc. So the context in terms and scope of this process is very specifically our Medical One portfolio, which we call, as previously called, the Oak Hill Wealth Migrate Oak Hill Park Development, or LLC as we call it. We simply just refer it to Medical One at this stage. The second one is what we call Medical 2. The third one is obviously Medical 3. And the last one that we're going to consider in this portfolio is Medical 5. Medical 7 and 8 has not been considered, purely because it's very recently done. So to this end, I would like to go a little bit into the market conditions. So Paul and Bruce, I think what we would like to understand is a little bit what is the market condition prevailing in the United States, a little bit specifically to the medical office block and what you're currently observing on the ground. I've got some reports available. Just let me know if I should show that as well.
Okay, thanks, Akil. This is Paul. Bruce, just jump in if you want to add anything or feel
sure
differently. I think basically right now for U.S. market conditions for healthcare real estate, if we keep focused on sort of what Oak Hill, Med 2, 3, and 5 are, everything is at essentially historically low cap rates, historically high, sales prices. There's a lot of institutional money that is now focusing on healthcare, probably for the first time really ever. A lot of the big, private equity funds like Carlyle and Blackstone and all these types of companies are actually raising funds specifically for healthcare platforms in a very concerted way. So, we're seeing conditions where we've been in healthcare for almost 20 years, and I just never have seen pricing achieve the levels it's achieving now. And that's really what sort of, for me at least, was the genesis of this conversation was, we're out looking at deals every week, predominantly in the Southeast US, and we keep running into a wall where, quite frankly, we just can't afford a lot of the deals we're seeing. And we are finding some, here and there, but for the most part, everything is just overpriced. And when we model the deals out, they just don't make, economic sense from a cash flow perspective or a capital appreciation perspective. So it sort of made us look in the mirror and say, well, gosh, if everything is so expensive, why don't we sort of flip the script a little bit and say, we've got, 4 pretty strong assets here. We've got a couple of years of history on all of them. We've institutionalized the back of house as it relates to the record keeping and the accounting and the books and records. We've brought it onto our management platform. So, everything sort of looks and feels good for an institutional buyer. So that's sort of what our perspective has been. Instead of, beating our head against the wall trying to find deals, it may be a good time for us to actually exit these deals at these historically high rates.
Yeah, the only thing I'd add to that, Paul, is what we've also found is when you do have institutional quality investors enter the marketplace, they are typically more comfortable writing a bigger check each time they invest because it's the same amount of work to get a deal closed. So to the extent you can aggregate a few projects into one sale and they can write one check for the whole thing, it certainly helps the process and also helps drive value.
Absolutely.
Yeah, no, Bruce, I think it's clear that this only makes sense over a certain portfolio size. We've currently seen or heard from yourselves and other players that, at least above $60 million portfolio size would make sense. Currently, our portfolio size, I'll show the figures just now, it's around about 64 million based on the original value, if I remember correctly. So yeah, it's definitely in range. I think the other point that I just would like to also culminate in, Paul and Bruce, maybe just comment on if the cap rates, maybe just let's just cap on the cap rates for the investors. The lower the cap rates, the higher the selling price. Just remember that. So it means that if you buy at an 8% cap rate and you sell at a 6% cap rate, you have a 2% compression rate, and that basically means that you make a serious capital gain. So what we are discussing now is we have seen that the cap rates has dropped down, and we've seen a spread of them, and these are the figures that I'm currently showing on the screen. This is the CRB Medical Office and Healthcare Report of August 2017. And the point that I want to make on this is, Paul and Bruce, maybe also just touch base on the fact that the cap rates can bottom out. and then a new cycle of rising cap rates can start, and what is the likelihood of something like that could be on the cards or near on the cards, and the implications of that.
So I guess my perspective, sorry about that, my perspective on that, I just don't feel like that the cap rate market's going to get, you know, maybe it gets another quarter to 50 basis points less of more compression. I just don't feel like it's got much more room to go beyond where it is without there, you know, without there being any sort of yield. So I think at some point this thing will sort of start climbing back up in the next few years, and especially as rates start to go up, interest rates start to go up here. I think that's going to happen. Bruce, what do you think?
Yeah, absolutely. You know, we've been in a low interest rate environment for many years. The odds of interest rates going up versus further down, I would certainly handicap them going up before I would handicap them going down any further.
Yeah, so maybe just translate it in another way is that if you seriously delaying a sale, you could then be caught up in another cycle that you simply just have to wait out till you have a favorable selling conditions again. So that is the one risk of not continuing, correct?
That's exactly right. And, you know, I think we all realize that real estate is a cyclical business. You know, medical real estate less so than a lot of the other product types, but it's a cyclical business nonetheless. And if we're in a low interest rate environment with a lot of institutional equity that is looking for deals that they weren't there before, it seems like that the stars are aligned for at least to pursue a sale whereby you can achieve maximum value. Are you always going to time this perfectly? You know, you can never expect that, but based on the facts on the ground, and that's what, you know, Paul's due diligence found, was that the portfolio sale type of cap rate and value is certainly there, and it is worth pursuing.
All right. Then I think some of the principles that we are considering here is obviously a portfolio sale principle. Maybe I can ask you, Bruce, maybe just outline what does a portfolio sale principle mean, and you know, what's the rationale behind grouping together assets instead of selling the assets off individually?
Yeah, I think I kind of touched on that point a little earlier. When you get into this landscape, you know, your investor on a single, say, $5 or $10 million deal is going to be a different investor profile to someone who wants to buy a $50 to $100 million deal. When you do have a space which becomes attractive to institutional investors, you know, their own cost of capital is lower than the investor in the lower rungs, and they would typically be in a position where they could pay more for an asset or a portfolio because they do not have the restrictions that a smaller investor may have. And as a result, especially if you have multiple institutional investors in the space competing for good product types, that is where you can drive your cap rate down, like you said, and ultimately your value up. Now, is that you know, an exact science? Absolutely not, but that is what is going on right now.
Okay, fantastic. Yeah, I think from our perspective, the investment committee said that we need to evaluate the process. Some of the principles that they've outlined for us is that they've said that we need to consider a process that we would sell these 4 assets as a whole. And then the second principle is that investors should have a choice if they would like to roll into a next investment or not. And the third principle is obviously that Wealth Migrate ensures that they can secure an asset that would be delivering similar returns, if possible, for the investors to roll in. So these were let's call it the guiding principles that we were given by the investment committee. And what I would like to do now is just step through the actual process. I think we have outlined the process in the document that was sent out. So I'm just going to run through that here on the screen. So the first step is that we have informed all investors of Medical 1 to 5 of the actual process. This is outlined in step 1. Second step is that we would like to understand from the investors that we would like to make the assumption that we would like to proceed with this process, and we are effectively seeking a mandate. With regards to being technical, Medical 1, 2, and 3, investors have to communicate if there's any specific objections. And similar with Medical 5, which has also got a tropic listing leg, which we will formally communicate on the market. So I think the first step for us was to understand if there is any specific objections, and that's also the purpose of tonight, that if any objections is there, that it should be raised. Our assumption is that there will not be specific objections, and that the investment committee will then proceed with the process starting around about the 10th of October. From the 10th of October, the Wealth Migrate team will be in Atlanta for our buyer's trip. So even though the buyer's trip is continuing, we would like to engage then with that process with Paul and Bruce as our sponsors. First of all, I think the first main thing is we would like to get to a broker mandate, and I'll ask Paul and Bruce just to explain that a little bit better. Secondly, understand the tax and the consultant and tax and lender fees and penalty fees. As you know, some of the current loans is not yet out of their, let's call it, fee range, where it means that if you terminate earlier, there would be an additional fee payable. We just want to understand the impact. Obviously, notify lenders of the process, not of a decision. And then obviously we will investigate and evaluate options for a role in investment. So I think that is the process that we would like to start in October. Maybe Paul, just give us a clear understanding of what is a broker opinion of value and what is the purpose of it, specifically in the US market, and that methodology that you guys are so familiar with.
Yeah, so I mean, really, that's the broker opinion of value is essentially kind of a step one when we would take our assets and go to basically somebody that specializes in healthcare investment sales. In this situation, there's a group at CBRE that has a national platform in healthcare investment sales. They're kind of the preeminent group in America, and one of their principals is based in Atlanta. And so we would start with him and have him analyze our financials, essentially kind of the books and records that we share with you guys on a monthly and quarterly basis, and run through our numbers to basically derive a range of sales prices. So then we can look at the numbers and say, okay, are we sellers at these numbers? If we take the high and the low and sort of blend into an average, is that a number that we are willing to transact at? And if the decision is yes, then we would go forward and engage him to go ahead and start the whole marketing process and put together the nice offering memorandum books, and then distribute it to his contact list to help find a buyer. But really, the broker opinion value is kind of step one to make sure that if he comes back and says, if we think it's worth $100, and he comes back and says, we're only going to get $50, well, then we're not going to do a sale, because if he doesn't believe in the value, then I think we all like the assets that we're in. I think they produce cash flow. So we're not in a position where we have to sell something or like this is a distressed decision. So it gives us kind of that chance to say, okay, yeah, we feel good about the number, let's move forward, or we don't, and let's just kind of carry on how we're doing it right now.
Yeah, then Paul, my understanding is also that the individual assets will be evaluated. That means that there will be a value per asset, and
Correct.
then we'll
have a value. The instructions he's going to have is a value per asset, and then we're going to have a value per portfolio, because obviously the investors, somebody that may be in Med 2 may not be in Med 5, and vice versa for Med 3. So we're going to try to get portfolio pricing for the individual Med 2, 3, 5, and Oak Hill deals, and then we'll have the consolidated valuation. They'll give us an allocation on pricing so that everybody's getting their appropriate distribution, so to speak.
Yeah, I think for the investors, that is also one of the key principles that we will follow, is that the individual assets will be evaluated. Then the portfolio will be evaluated, which we assume will be a higher price than the sum of the individual assets. Should we then go through a sales process and achieve the higher value portfolio value, the portfolio sales value will then be pro rata based on the individual asset evaluation, so that it would be a fair distribution of the actual gains. And from that perspective, it means it treats investors fairly, from the perspective that people that have started investing in Medical One in August 2014, if I remember correctly, will obviously get a higher price, because they've just simply been longer in the market and perhaps bought at a better price. So I think that is just another consideration that has come up already with some discussions that we had with
most likely, Michiel, most likely what will happen, in my experience in these kind of deals, and I'm sure Bruce can weigh in on his, is that the buyer is going to allocate pricing. So we're not going to take a position on, well, this building's worth $100 and that building's worth $90 and that one's worth $70. I don't want to get involved in that, because I know that everybody has, there's different owners in each one of these entities. So typically what's going to happen is the buyer will then come back to you and say, we're paying you $60 million and this is how we're allocating it. So that really it's third party to us, if that makes sense.
Yeah. Then investors, while we're talking through the process, I encourage you, just please jot down your questions in the question box that you should have on your screen. I've got my first question here from Ian. Ian, I will treat that question just now. So please, for the other investors, please put in a question. We are leading up to the question and answer session, where you can really clarify and ask your questions. And that's also, I think, what I would like to just poll at this stage. The idea is that we are going to ask you to specifically raise your questions to us tonight, and also specifically write your questions to us if you have got specific things that you would like us to address in the process. The investment committee has been very clear. They would consider all the requests coming through, and we will put that as part of the process. So please let me ask you, if there's any specific things that you would like to let us raise, please make sure that you put it in writing to us. If we do not hear from the investors, we assume all is good. So I'm just going to wait for the poll. Thank you very much for all the response that I've got. It's pretty much coming through as very positive. So just a minute or two more, and then we should be ready with that. Right, I'm just going to close that off. Right, so just want to continue. Guys, can you see my word screen here? Just want to make sure it's still online. Sorry, I'm just juggling a little bit with all these screens. So Melanie, can you just give me feedback? Do we still see the Word document on the screen?
Yes, Michiel.
Thank you very much. Right, so the next step in the process would then be the investment committee will then gather, hopefully we've just made a good estimate of the timelines. It will take a bit of time to get everything together, but the idea is that end of October, beginning of November, that investment committee then get all the facts, and most importantly, the timeline will be driven by the broker opinion of value, which is a key consideration. Once that is then brought in, obviously, if the sale price, potential sales price, is materially more than what the current exit prices on the individual deals are, then that will be a favorable condition to proceed with a minimum price level. And of course, there would be specific conditions. So the idea is that the investment committee will then get the professional opinions in, and then once it's released to the market, the brokers will then take that to market, and then obviously invite people to participate in the bidding process. The bidding process is obviously a normal sales process. It can take anything from 3, 4, 5 months. So I don't want to speculate on that, but the actual transaction typically takes 3 months. So just to get a clear expectation of timelines, so we don't see it conclude earlier than first quarter. Bruce and Paul, this is just what we've brainstormed. Are you comfortable with that timeline expectations?
Yeah, I mean, I think you said it earlier. I think that really the first break point really is going to be the broker opinion of value. So I think that trying to conclude, if the decision is to move forward, then I think that trying to conclude a sale of the assets in Q1 is probably right. I think we're too late to try to get it out by the end of the year. I just don't think practically that could be done. So yeah, I think that makes sense to me.
Okay, awesome. Thank you, investors. We've got a nice set of questions piling up. So I hope, Paul and Bruce, you're ready. There's some very interesting questions coming through. I don't know if I'm going to be able to answer all of them, but let's go through the process. Yeah, just to give some context to what are we talking about, I thought it good to just give an overview of what we have seen at the investment committee. You will see the figures on the screen at the moment. I just want to take you through them. These are the original deal values, which pretty much has been on the cards. So this is pretty much we have seen from the regional side of things. And then what we have looked at as certain exit scenarios. One of them is a capitalization rate of 6.5%, and we then could see the potential gains and losses. So this would be one of the scenarios that we would consider. I think most importantly is that the situation is that the portfolio is fairly large. There's quite a number of investors in these portfolios, and there's quite a significant gain to be realized should we be able to get a certain price level. So I don't want to speculate on that on this stage. It doesn't help the process. I think we would like to employ the professionals to help us get to a professional opinion in the market. So the whole idea of the investment committee was really to say, please engage professionals in the market so that we can have an objective opinion. All right, so I think that's what I would like to say about the process. What I would like to do now, I'm going to switch now into the question and answer mode. Yeah, we're doing pretty good on time, so I'd like to keep it within an hour. Most of our investors typically have given us feedback that they don't want to spend too much time on that. Right, so I'm going to just start off with the questions as I've got them. So the first question I've got is if we roll over, are we liable for capital gains? My understanding is yes, we are liable for capital gains. Bruce, I just want to cross-check with you. My understanding is most of the investors are LLC investors. The capital gains proceeds will be distributed down towards the LLCs, and they will then deal with the tax liabilities in the LLCs, as most of these investors are LLC investors, correct?
That's exactly right.
Okay.
I think by the
Awesome.
time a sale is consummated, everything will be long-term capital gains, so there wouldn't be any short-term capital gain impact.
Correct. And for the investors on Medical 5 that is via the platform, they would the capital gains will be paid on your behalf, and that basically means that the proceeds will be the tax required will be paid in the US, and the net proceeds will then be processed offshore in the form of dividends. So from that perspective, it's also done. Right, so assuming a mandate for processing is given today, will there still be an opportunity for investors to have a say when the actual details and numbers are on the table? The process as follows is that we're going to have to come to a point that we appoint the decision makers, and that decision makers is going to be the investment committee. So we're going to have to deal with that at the investment committee level based on the broker value of opinion. So to answer your question, we will not be able to deal with all the investors' opinions. We need to agree to a process and then follow through with this process. Then with regards to will the US-based LLC structures be closed and the money be moved to the platform? That is an interesting question. For those that don't know, some of our investors has got 1 or 2 investments in the LLCs, and they would, in the long term, not like to continue with the LLC structure in the US. For those investors, we will simply pay out the proceeds. The proceeds will then actually result after your liabilities, tax liabilities, will actually reflect back into you as a person. You as a person has then the option to move the money to the platform. Of course, cash flow wise, we can do it on your behalf, but that's of course your instruction or your decision. So yes, we can move it to the platform, and then if you would like to roll into the next project, the preference obviously would be to be on the platform for those investors that want to avoid still maintaining the LLCs in the United States. Next question, how will the continuity of our quarterly distributions be affected by sales taking place? The answer is very clear here, is that the investments will be sold as a portfolio if that goes ahead, and once the sale process has been completed, obviously that distributions will stop. You will obviously get the last piece of the distributions as part of the final payouts, and then in the ideal world, the timeline would be to roll into a next investment almost at the same time. However, that cannot be guaranteed, but we would like obviously to time a next deal within 3 to 4 months maximum of a sale. If we can realize that, the only disruption would hopefully be that period, and then the next investment will start again. So I don't think we can guarantee that there will be no disruption should the investor choose to roll over to the next investment. Right, I think, Paul, I think a very interesting question that we're getting here is that should we decide not to go ahead with the process, is there any specific cost that we need to be liable for? Is there a cost for the broker value opinion, or
there shouldn't be any cost. At the worst case scenario, there may be some incidentals that cost $2,000 or $3,000 or something, but it won't be anything material as it relates to these deals. So no, I mean most of this we should be able to get done sort of on the hope that they get hired to go sell the buildings. But yeah, there may be some incidentals or some reimbursables for some marketing materials or marketing expenses, but that it won't be much, if anything.
Yeah, I think that's very clear. That I think the whole idea was that we do not want to enlist a whole lot of brokers simply just to run after the portfolio. It's a very expensive timelines for them. We want a serious broker that spends serious of his own time at his own risk So that's my understanding, correct?
Exactly. That's the right way to say it.
All right, 100%. No. Good. Right. Then I've got a question here. No guarantee, but what is the type of capital gains that you're looking for to get? These are good income assets and good capital gain. It needs to be good capital gain. Yeah, I think what we have communicated also in all the deals, operational agreements, is that if we have a potential sale like this, it has to be material for the investment committee to actually decide to proceed with, let's call it the unsolicited offer, as we term it. So from that perspective, we will definitely look at what the current deal will do and what was planned for deal as an individual deal, and should the whole be better off than just the individual deal, then we'll do that. So at this point in time, we don't have a fixed figure. We would definitely obviously say it must be material. Material means that we need to have a substantial gain over and above the planned gain. So from that perspective, that will be into consideration. Right. I think the other question.
If I can add to yours, I think it's a really good question, because, and it goes back to my kind of initial point. We're really in the best of both worlds here, because again, we have 4 assets that I think, it seems to me like everybody's pretty happy with. We're making distributions. The buildings are running fairly well. They're good investments. At least from my perspective, they've been good investments since inception. And so I think for us from my side of the fence, and for me and Bruce, for us to want to move forward with a sale, it's like you said, it's going to have to be a double-digit type of deal for us to actually want to contemplate a sale.
No, that is clear. All right. Then the question here is, how long could the whole process take? Minimum and maximum expectation is fine. I think the expectation in my eyes is around about 6 months. So I don't think it can be much different from that. We are both in the US and in South Africa, for that matter, going through a holiday period. It's not that material impact from a South African perspective, but in the US, they've got some major holidays in November and December. So yeah, that will impact a little bit, but I think the idea is at least maybe up to March next year, like I said, Q1 next year. So yeah, let's see how it works out. We'll keep you updated if we should proceed. Right, what if only 3 of the properties are worth selling and the 4th one is a loss to the investor? Yeah, that is a definite scenario that we will consider. I think, like we said, we will consider the overall net gains, and it must be material. If one of the members of the portfolio, it doesn't make too much sense, we will also then do an individual realization or a view on the individual asset. So yes, there is a potential that it can be fall off, but I don't want to lead any of those discussions. I think the whole idea is that we would like to really understand if it makes sense. So for the moment, the scenario is a complete sale of the 4 assets. That was the brief and the guidelines, and we will come to a conclusion. Yes, it's possible, or no, it's not, under what condition not, or yes, it's possible, under what condition should that be. But that would be a next scenario, and if we need to engage investors at that point, then we'll do so, and that's expected to be, like I said, first week in end of October, first week in November, should the BOV be on time. If not, that can be pushed out later in November, but I don't think it will run into December, hopefully. Right. If the deal is sanctions and come back unstuck, do we remain individual ownership, or do we now and will be stuck as a whole part of the portfolio? The answer here is that at the moment, this is a question of a portfolio sale. Should it doesn't continue, then we'll stop with that, and the individual assets will continue like normal. Nothing stops us to ask the same questions next year. As you know, that we have engaged on a yearly basis to review the portfolio. So the reason is this year is the first time we're reviewing the portfolios from this perspective. The main driver for that, if those that remember, in August this year, the first investment turned 3 years, and we are now in the last 2 years of the planned holding of that asset, which is Medical One. So especially from a Medical One perspective, we need to understand the road forward for year 4 and 5, so that we can prepare should this not continue. Right. Yeah, please, the best way that we would like to do is, I would like to ask all the questions to be in written format. The whole idea is this will be recorded and it will be shared with the investors. What is the chances of to getting the 4 investments? What are the chances to getting 4 investments with the same return? I'm not so sure about that question, Louis. Maybe you can just retype it for me. My understanding is that we obviously would now, as a second leg, be able to see if we can secure assets that can do similar flow. That's obviously not a given. That must also be bring into consideration. We have 1 or 2 potentials identified, but I don't want to speculate on that until we've seen the numbers. Right. If my asset, Medical 5, indicates an IRR of self 12%, is it possible that the proposed portfolio sell that I can get paid out be less? To answer your question, the idea is that we would like to have additional gain for the investors per deal. So it means that the whole idea is to try and see if we can get more than what was projected. So that was the rationale, and that is the intention.
Michiel, can I just add on to that?
Please.
Yeah, just the one thing that people just need to keep in mind is that you know, a lot of these internal rates of return are a function of time. The idea being that if we can return the same whole dollars in year 2 that we were expecting to return in year 5, that makes for a compelling investment. Now, the whole dollars that you get back may be the same, but your internal rates of return will be substantially higher than what they would have been considering a 5-year hold. I just wanted to make sure that that's clear in the numbers.
Yeah, no, thank you, Bruce. That is a very good point. Effectively, it means that if you get the same return, but it's at a shorter period of time, obviously your internal rate of return is much higher. So it's also got to do with the time value of money. Yeah, so I think that clarifies that up. Yeah, I think the next investor question is similar. He is only invested in Medical 5, and his concern is that because he has not been invested very long, he could be at a disadvantage and maybe not get the gain. So yeah, I think the answer is pretty much the same. If we can get the same returns instead of waiting another 4 years, then you definitely would win, and that would be obviously our first prize. If we can even improve on that, then you should actually gain from that. So I think that is how we will look at that. Next one, could we wrap up the LLCs and do features on the platform due to the complexity? By all means, I think a lot of our investors has now started moving the investments onto the platform. The main advantages of that is that's really a turnkey solution, and you don't have to actually administrate. I always joke a little bit with the investors that's starting new and hasn't gone through the process of maintaining LLCs and tax returns. So it's not a big story, but some investors just think that it's really too much trouble. So for those investors, for sure, we are on a very clear path to see if it makes sense for them to be on the platform. Right. then some of the investors, could you please write your questions so that we can have that in writing. We're not going to do audio tonight. Right. What is the share of the profits will us investors get, and how much it's going to go to Wealth Migrate? I think the question is here, we've communicated that from the beginning. So per investment, you can look at the investment returns. It's been stated for you every time. Most of the cases is that the net profit gains is shared 50% with the investor, 25% to Wealth Migrate, 25% to the property partner sponsor, which is SG Property. So please have a look at your documentation. It was outlined there from the beginning.
That just, Michiel, just to be clear, that is after getting a preferred return, just so everyone's clear.
Yeah, no, that is very clear. One of the best things of these investments is favorable funding is in place. That's the reasons to keep the investment, as a new funding may cost more. Yeah, from my perspective, Bruce, I just want to touch base here with you. On the one side, we've got individual loans, different types of loans. The one loan is a CBNS loan, the other one is just normal loans. One of them is fixed, the other is floating. So I think should one roll over into a larger asset as a group, economies of scale could also come into play. So yeah, it's a difficult question to answer in general, but my understanding is that you can still pretty much get a good rate should you have a larger loan that you are looking for.
That is a true statement, yeah.
Okay, awesome. Right. Right, so I think one of the key questions is again, what alternatives will be in place? I think the investment committee was very clear to us as a deal team that we need to, at the same time, source an alternative. That process is well on its way already, so hopefully we'll get some feedback on that during our trip coming up. Right, so there's a very long questions, just bear with me. We need to know exactly how much we get after tax and other costs. The most important cost of sales in Medic One, I'm getting a yield on 100K, but the tax people have depreciating the capital to offset earnings each year. So I expect there will be a tax hit on the money paid out. So the first thing is to understand if there's a profit, need to be sure that we're getting out more than my original investment. Yeah, I think that point is very clear. We will engage professional people. We actually have started the process already, just that you know. We will get a professional tax opinion for the investors so that we're very clear that based on how the K1s has been filled in every year for the deals, we've just completed almost all the K1s for the deals, and our tax consultants are very clear where we stand on it, and we will then put the scenario of a sale to them, and then they would advise us on the capital gains, depreciations, and all that. So I think that is well part of the consultations that we will do very specifically. Right. I'm not going to discuss, there's a question about the capital gains process from a US and a South African perspective. For that investor, I will get professional people to answer you on that question. I'm not qualified to talk about capital gains process from a US and a South African perspective. I think from Wealth Migrate side, we've been very clear that the investors must seek their own professional advice. We are here to do a product offering, and then actual consultation on their personal tax situations must be done by the investor themselves. We will give feedback on the position of tax from a deal perspective, and that will be made available to investors when we get that opinion. All right, so yeah, guys, that was quite a long question, questions and answers. I'm pretty much exhausted all the questions there. So from my side, maybe I think Paul and Bruce, let's make some closing comments, and then we can conclude. So investors, thank you from my side to be online tonight. If there's anything specifically, please, we expect that you raise your questions. The question that was raised tonight has been captured and will be inputted into the actual evaluation process. If there's any other questions or specific clarifications, please address it to the Wealth Migrate email address that was on the letter. We will take all of that into consideration, and then we'll give you an update as we proceed. At this point in time, we don't foresee any material blockages, so that we can go through the to the questions, through the process. Right, Paul, Bruce, any closing comments from your side, please?
No, I think we covered it all, but I appreciate everybody's time and kind of hearing out this concept.
Yeah, I'll echo that. And I think the general idea by doing this was to create value through the scale, and hopefully that plays itself out through the process. And this will allow an opportunity to aggregate the investments and get a value premium that wouldn't be there on an individual basis. So hopefully that's exactly how it plays out. We look forward to working with everyone.
Yeah, no, thanks, Bruce and Paul. Thank you very much for your time. We've certainly have seen now real life examples of exactly this portfolio sale happening in Atlanta. So we know it is happening at the moment, so we can learn from that processes. So from our perspective, thank you investors for your time tonight. We'll keep you posted. Next communication will be just before we leave for the United States, which will be around about the 10th of October, just to make sure that we have got the mandate from you guys. So if that is a go from our side, then Paul and Bruce, I'll shortly see you in the US, and then we can start the process if we get the go-ahead. And then we'll update the investors as soon as possible based on the professional opinions. All right. Thank you very much to everybody. Have a good one. Thank you. Bye-bye.
Thank you.